Hi everyone, here's Gilles again for your tips on trading. Today is a beautiful Friday. I decided to give you a very important concept, and it's a giveaway. It's what usually professional investor and trader what they do, and I decided to give it to you for today for free. And at the end of the video, I'm gonna take you through a demonstration how you can do this. So what are you gonna talk about? I'm gonna talk about in this video like why you gotta get a statistics out of your trades results. It's very important. You gotta be able to know how much like how your trade are performing and how a portfolio is performing a certain amount of time. So that's what we call your edge. Your edge is what you know about the market. Your edge is what you know, and what you know, believe me, gives you a it puts you in a very strong position in the market because it gives you confidence, and it gives you confidence, and it keeps you disciplined. So for simplicity purpose, I'm gonna take this. First of all, I will make a disclaimer, right? The strategy I'm gonna talk about in my demonstration, it's just a strategy for like just an example. I don't trade that strategy, so be aware. I don't trade that strategy, but you have whatever works for you can be a strategy. You can use it, shape it on your own way, but that's not my strategy. I don't advise it. So let's get started. So what are the key elements of your edge? What information do you need to draw statistic data out of your trading result? So basic elements are your time, your entry strategy, and then your money management, right? Money management. I think I've discussed about it already in one of my previous video, but that's basically the really simple element of a trading system, which you can use to analyze how your trade has performed. A lot of people says have a trading plan, but actually, what is a trading plan? Me, I don't call it trading plan. I call it like trading statistic, right? I have a statistic of all my trades, right? I have statistic and I adjust it as with time. I've teach myself how to adjust my stats, how, like, because the market move into have different behaviors. In some month you can have 1,000 pips volatility, in other months you can only have like 100 pips, and so I have to adjust my stat according to the market volatility. So but that is skill you can only have when you have more experience in the market. So first of all, it's your entry technique. You have to have a set of rule of entry. They must be very well defined, and you gotta know. And you have to respect that. You like with like you have to apply very strict rule and discipline to respect that. So that's how you can have your edge, because you can measure, you can compare potatoes with apples, right? So that's why you must always have the same entry to be able to identify if the edge is applicable to the same entry style used for that trade. You can be applying one strategy and another strategy, and then you compare how that strategy, like how your whole portfolio have been performing. So you must take note of the entry system you use before getting into that trade. Now, the second step is to know how far the market has moved against you and how far the market has been moving. Wait, how far the market has been moving against you before turning into profit. So that's a very important measure you must take into consideration. That makes you trade with confidence, all right? That's what helps you cutting your losers short, because when you know that information from a specific entry point, and you know that usually the market does not move against me at more than 1,000 point, you have an edge. So usually when it cross that line, you just cut your loser short. So it's like now the odds of success are moving against you. And now the last thing is your time. You gotta have a time where you know, like, within the certain amount of time, usually my trade has been moving not more than the maximum or the average point the market usually moves against me before turning into profit. And then you have that time to see if you are having a winner or a loser, and within that you have time to spot an exit signal. So I'm gonna go into the demonstrative section, and then at the end of the video I'm gonna discuss about how you can englobe all this information to have a very good statistic out of your trading system. So welcome to this demonstration section. Right, so for the example, right, I use the Bollinger Band tag price signal and the moving average as a filter, and let's say already pre-made this thing. So but for the example, let's say on your trading report you had a trade that opened on July 9 at 11 a.m. and then closed on July 10 at 12 p.m. Right, so let's get started. To spread to put the period, you can use the vertical line. That's what I personally use, and then you can modify the data here, like I said July 9, and then let's enter the time like 1 a.m. and then you confirm. Oh, I put like, sorry, I put 1 a.m. 11 a.m. sorry, 11 a.m. Yep, so there is our entry time. All right, so now let's put our exit time. Exit time, we said we're gonna put another color. You can put like the yellow, yeah, and then July 10 at 12 p.m. yeah, so that basically means we get into a trend on the blue vertical line, and then we close our trade on the yellow vertical line. So now let's have our like the price of entry. For the price of entry, let's say we enter the price of 112.104, right? So we're gonna put our entry on blue color as well, and let me fatten a little bit this bar, and let's say 1.1204, and then let's confirm, and then we exit at, let's say we exit at 112.222, and now let's have this line, let's set it like blue again, yellow, sorry. So we keep in mind blue are for the entries and yellow are for the exits, right? So here is our trades here, right? So we enter this price level on this date where you see the crossbar, and then we exit on this day at this price, around this price. So now let me show you how you can spot like how much it, like, because like remember, trading, you must be on your demo account first. Here is my live account. You can see it on top of the screen, but you have to start first on your demo account. And I will really suggest you, when you start trading, please, it's not your money, right? So you don't need stop loss on your demo account, because you first have to know how much the market is moving against you before having an idea of how much stop loss you can put for your strategy. So now let's say on this system, you are trading, your entry is where there's the price, the candlestick top, the lower Bollinger Band below the moving average, and then you exit when there is a price tag on the upper Bollinger Band above the moving average. So that's going to be the simple strategy I'm going to use for this example. And just remember, this is like, that's not the strategy I'm using. That's just a strategy like I use for this demonstration, for demonstrative purpose, right? So now let's get started. So we enter this price basically, and then let's see how low the market has been moving against us. So you click on your entry price and you hold onto the lowest level, and let's say this trade was a buy. This trade was a buy, it wasn't a sell. So everything below our entry is a loser, and everything above the blue line is a winner, is a winning pips. So here we can see here on this example, we have 170 point that the market has moved against us, and then start moving up. It went down a little bit here, and then came right back up. All right, and then we took our profit at 123 pips, 123 point. Here is in points, right? So I don't know if you can see whatever I'm showing. So just focus on this crossbar. So let's start again. So you click the crossbar, you click here where the price, you enter your trade, you click and hold on the lowest level your trade has been, and then you cross again onto your exit point. So in this example, right, if you, let's say you have been sampling your trade on over 100 trade, so you are trading this strategy, you wouldn't like your stop loss, then now you can set your stop loss. You wouldn't like your stop loss to be beyond, on this chart it's like 143, but I would say that you can put a few extra pips, like let's say 150. So you wouldn't like your stop loss to be below 150 before going into seeing if your profit will be, if your trade is a winner. Then here is your take profit at 130, and let's say how many times it took you to make that money. So this is an hourly chart, and then when you click on the crossbar from the left to the right, so what you see on this, what you see here, right, the number 15, 18, the first number, the first figure is the number of candle, right? Is the number of candle count, so the number of periods. So here is 14, so it means 14 hours, 14 candles, 14 hours. So that's what it means. And then here the other number, like the 74, and that's going down 38, is the number of price price movement. So right now it's like, oh oops, like I'm sorry, so right now it's like 14 candles and 168 pips, and if you go up it's going to be like you set an entry here, so it's 0 pip, 0. So as you move up it's like 49 pips be above, and as you move down it's going to be negative, like, you know, as whether you are buying or selling, gonna tell you how many pips you have been winning and losing. And then here is the price. So now let's apply it on our trade, right? So on our trade we get in here, so we went down, so it took us 25 hours, right? And then within the 25 hours, like the lowest price level was here, so it was 1.6. like remember I told you the first thing is like the number of period, the second thing is the pip below or above, and then so in this instance it's like 166 pips, right? And then it started reversing again. So on our exit date, the price we made 132 point. So that's how many profit you made on this trade. So it's going to be all for this demonstrative example. And to sum up, you have on this trade, you trade the Bollinger Band price tag with the EMA, with the moving average as your filters. Like you confirm when it's a tag below the EMA, and you confirm your exit when it's a tag above the EMA, and then you exit, all right? And you have 150 point stop loss allocation for your next trade, and then you had made 132 point. So let's go to the next part where I'm going to summarize all this concept for you. So now let's talk about how you can englobe all this concept we have been talking about. Let's say on this, you must have a sample size to have all this to make this assessment, right? So let's say you have 100 trade you want to analyze, and then over the 100 trade you won 80 times, and the total dollar value of those 100 trades was $10,000. Of those 80 trades was $10,000, and then you have lost like 20 trades, and total value of these losers are $4,000. So it means now you have data to calculate your profit factor. Your profit factor is the formula is the total profit in dollar divided by the total losers in dollar. So in this example, it's going to be 10,000 divided by 4,000, which gives you 2.5. So what your profit factor tells you is like your profit in aggregate are two times and a half more than your losers on a sample, on a specific sample of trade on a specific number of trades. So now you have 20 trades losers, 80 trades winners, and you have a 2.5 profit factor. And now this is your edge, right? You can now have a conclusive note. Remember, you usually heard things like you gotta know what your edge feels like and tastes like and looks like. So this is the only way you can have it now. Now you have the information. So now you know that your edge usually over 25 hours. Let's say into this example, let's say usually your trade does not last more than 25 hours to make you profit. So you have your edge, you have your three elements. The times, you are 25 hours, the pips against you like 150 points, and then the average profit range you have above. No, like the entry is like the strategy you had, and it's also good to have an estimate of how many profit you usually book. In this example, let's say you have usually book like 130 points. So that's how you get the information. That's what you know. That gives you a net. That's what you feel like. That's what it looks like. You know that you have 2.5, 80. You have 80% accuracy that the market is going to move 130 points with you without crossing more than 150 points against you. So it's gonna be a little bit fussy, I know, and if it's your first time to hear this concept, but if you are familiar to this concept, they are very easy to implement. And I can do another video where I can go through this thing more easier for you. And I will wait for your suggestion in the comment section below. And it's going to be it for this video, for this tutorial. It was Gilles for your tips on trading. Thank you for watching.